Oh,
Hey, good morning.
that's
Relative.
okay. Sorry, yeah, there we go. And yeah, so I'm Paul Bratby. I'm British. I live in Spain. I've been trading for over 20 years. Those on our YouTube channel will know me reasonably well. We develop software as well around my strategies, but today is purely about stocks and identifying potential movers using Elliott Wave. And then I'm going to hand it over to AJ, and he's going to do the options plays, and really talk about how to get in there. One of the things we're going to talk about though today is also the start line. I'm not one of those ones that catch the falling knife. I want to make sure support is gathered, we've based, and we start to move away from that support if we're going for long. So it's almost like a logic circuit where we look for that and or if happens, then that's the go in theory. For me, it's different because I've never traded options. I'm British, so contracts for difference or physical stock for me is normally the way to go. But I think this will work very well with AJ because he's the options guru. I can find stocks every day. So between us, but especially for those in the US that do trade a lot of options, I think this mashup should be pretty exciting. And it is a trial. So we're going to try this a few times over the next few months just to make sure that it's worth it. We'll look back, we'll get some feedback, and we'll go from there. Anything you want to add, AJ?
Hey, this is AJ Brown, and I founded Trading Trainer back in 2002. We've been teaching people how to trade stocks and options. Since that time, I've been doing it myself since 1997, having a ball. And so I'm just going to be playing off of Paul today. Paul's going to come up with some great patterns. We always talk about in my crew about first recognizing the patterns, understanding what's happening in the particular symbol, and then applying different strategies utilizing those patterns. So, Paul's got the emphasis on stocks, and whatever the ticker is, he's got the moves, the pattern, but now we're going to show how we can apply the options component to it and get as much, eke out as much as we can. I'm excited.
Cool. Me too. So we're going to start off. Don't forget, if you've got any questions, whether it's on Facebook, YouTube, Twitter, Twitch, wherever you are, put them in the chat box. We've got a fantastic tech guy in the background that will feed us those questions so we can look at there. So let's get away with the first ticker, really. IGT, International Game Technology. First of all, what I'm going to do is just take the Elliott Wave off there a second. I just want to go back to basics. And we're going to look at this, and we're going to identify that it doesn't take the brains of a rocket scientist to see that is in a bullish trend. So we don't really want to be shorting that at any point, as long as it remains in our channel. One of the things that I always talk about framing the chart. So we always try to identify a channel. It's not always there because sometimes the trends are shorter term. Plus also we'll look at some sort of important linear support and resistance zones that are going to affect our trade now, not all the way down here at $14. It's not really going to affect what we are now. So just keep your charts clean. So I've drawn this channel in here. One of the things when we talk about the channel is that usually you get some real good hits on the top or the bottom, but the main important thing is this center line here. We've got so many touches and clustering going up and down, both resistance and support through this center line. That gives us our direction, but also it gives us points of control for potential entries or support and resistance in the future. And you can see with this channel here, we've got a hit down the bottom here. We've got a hit at the top. So we've got three. So for me, a trend line is anything more than three. Two touches is a line. Anything more than three, it's a trend. Same on the bottom here. And the middle line is just phenomenal. Absolutely. So this is a real good trend line. I'm going to zoom back in here now. And I'm really, one of the things that I look for is convergences when we look at sort of linear support and resistance and those non-linear with the channels. So where we get this pivot point, hit the upper bound of the channel and comes back down again, that linear support and resistance zone, not a exact price, the zone is around about there. So look at pivots, try and get 2 or 3 pivots in around there. That zone of prices, it could be potential support. Another thing that I've got in here are Ema Clouds. So it's one of my inventions. So when I'm looking on the daily time frame for stocks, I have a 55 and an 89 Ema Cloud. So that basically looks at the highs and the lows of that particular EMA. And what we look for, again, this is non-linear support and resistance. If we're going bullish, the 55 has to be above the 89. That's one rule that you cannot break. And usually you will find that on a pullback against a trend, the 55 or the 89 will act as that non-linear support. It's freaky. A lot of trading is freaky. Fibonacci, it's Fibonacci day today, isn't it? I think. So it's a lot of freaky stuff. It's a lot of maths. Just to let you know, I have a degree in maths and engineering, but it has absolutely nothing to do with trading. I'm just a very logical person, an ex-military. So, that's where the logic comes in. I'm going to put the Elliott Wave back on now because this is what we're interested in here. Let it just do its thing. It does have to do a lot of complicated calculations. So where we are right now, that's the most important thing. We've framed the chart. We understand it's bullish. We've got some non-linear support in this 55 EMA cloud, which is fantastic. Now, with the Elliott Wave indicator suite, what we look to do is measure that wave 4, because trading the 5th wave, that following wave, is the highest probability move. So we need to understand the behavior of that 4th wave to see if it gives us all the right sort of combinations of rules and observations to say, hey, this is going to be good potential, a 5th wave. So linear support and resistance zones, these green, amber, and red zones, they're the fib zones, if you like, probability pullback zones. So we found the linear support in the amber zone. So if that support holds and we start to move away, there's an 80% probability it's going to go on and hit the automated 5th wave target there, around about 35 bucks at the top end, 34.68 right in the middle there. Then we look at the behavior of the wave 4 and a couple of other bits of tools. So we look at the false breakout stochastic here. Now, what that does is you see the yellow dots in the overbought zone there. That denotes a really strong bullish trend. So what happens with the stochastic, usually a lot of the time it's like a roller coaster. It goes from overbought to oversold to overbought. But when it gets into the overbought zone and it breaks out, but then it comes back in again, then it tries to break out again, they're what's called false breakouts. So that really denotes a really strong bullish trend. But then when it does break out and pulls back against that overbought zone and crosses in the oversold, those yellow dots, if you like, imagine the stochastic is like an elastic band. The likelihood is it wants to return to that overbought status and start to continue to be to print those that strong bullish false breakouts. So that's a good sign that this wave 4 has pulled back against there, and it's like an elastic band. It wants to spring back up into that main bullish trend. The next thing is we look at the Elliott Wave Oscillator. So this measures the wave 4 performance, and we look for a pullback between 90 and 140. And right now that crowning is perfect. Yeah. We've got a little bit of room if he wants to come back down and test this linear support and resistance. But right now, the 55 EMA cloud is holding. So technically, everything's good. Wave 4 is behaving fantastic. I've put a regression trend channel on there with the Pearson's R. So Pearson's R, really, we use to anything over 90%, 0.9. We what's called is an orderly profit taking pullback. So it's behaved really well. There's been reasonable volume, but not massive, and it's been orderly. When we do find support, we can put a regression trend channel, top pivot on the 3, bottom pivot on the 4, and we can use that for an aggressive entry. Right now, I think an aggressive entry is probably warranted. We do have conservative entries with these 6-4 moving average highs. So what this does is, so this is in advance by 4 candles. It takes the average of the last 6 candles and it gives you of the highs of the last 6 candles and then moves them over 4. So what that does is gives you a conservative entry. So a conservative entry probably would be around about over $30. But I'm looking at this because Pearson's R is pretty good. Everything else is good. So I want to go aggressive. So we talk about stop limit orders when we're actually buying physical stocks, or I'm trading contracts for difference. So for me, a close above $29 is where we need to be is our start line to get into this trade. So I've put my order on at 29.16 because I'm buying physical stock. For me, it's a cheap stock. My stop loss is going to be below the wave 4 around about sort of 27.34. So when I put that on and I look for a risk reward, that's a risk reward of 1 to 3 to the 5th wave target zone there. So, you know, even if it attempts the top end of this channel and doesn't break out, we're 1 to 2.5. So fantastic risk to reward. Yes, it's an aggressive entry, but getting that close above 29, breaking into the top half of the channel, there's a lot going for this trade. So hopefully the technical side of this looks well. And then obviously I'm going to hand it over to AJ now, and he's going to discuss how to play this with options.
Okay, so we've been listening to Paul, and Paul pointed out some real nice target thresholds. 29 for a nice aggressive entry, and then maybe 35 for where we would know we're doing really well. So let's apply some options to that. So I'm going to go ahead and just use a little bit of the fibs here to help me pick some strike prices. So if I line myself up with that $29 price roughly, and I come on down here, spread this out a little bit, maybe I'm going to be looking for a strike price around $27.50. Now, this back month option, the option I want to use if I want to instead of using the actual stock itself, I probably want to go out at least 6 months, if not more. So I'm thinking there's a July series of options. Now, the July series of options, depending on the size of your portfolio, there's not as much liquidity. So if you have a bigger portfolio, then you're going out to January 2023. So we want basically a stock replacement in this case. And as far as strike prices go, like we said, we're thinking of a strike price maybe down here around $27.50. And I want to, again, err on being more conservative. So again, looking at the option chain, I think I'm talking about this $27 call. So the $27 call right now is trading around $6.50. Again, I'm going to wait for Paul's entry, make it a conditional entry on the underlying symbol price. When Paul gets in on his stock, I'm going to get in on this particular option. Now, I'm going to put a stop loss down at that price as well. So in other words, when the underlying symbol, if it were to then reverse on us, I don't know why, but I'm going to have a risk stop loss down at the $27 mark. And I'm going to build whatever number of shares based on that particular risk number. So whatever I buy it for minus that particular stop out point, that's going to help me understand my trade risk, and I'll translate that into portfolio risk. Now, moving forward, I want to watch that $35 range. If I'm traveling north of that $35 range, I'm going to just back out of that back month option. It's going to be a stock replacement strategy. I'm just going to take my profit and run. However, if it starts to reverse south of that $35 target that Paul gave us, then I'm going to do something a little bit different, a little bit more elegant. And I've been jotting down my plan. I always like to trade my plan my option trade so I can trade them. You know, failing to plan is planning to fail. So if I get above that $35, I put some blanks here because I like using Paul's numbers here. When the underlying crosses, I think we said $29 over here. We said we were going to use the $27 call, use the July. If we have to, we'll use the January 23. We'll also put our stop loss order risk stop at $27. Now, if we don't hit that $35 target and we start to reverse back down, I actually want to go ahead and buy some sell some near-term premium. That's going to be my front month option. So what this is going to do is it's going to generate an additional set of income. I call it an instant dividend, right? And I'm going to do that at the money. So wherever that reversal happens, I'm going to err to the side of out of the money. And I'm going to use the December or whatever's near term. And in my definition, near term is 3 to 5 weeks to expiration. So I'm going, and if I'm doing weekly options, that's fine too. It's 3 to 5 weeks, error on the side of 4 weeks. And I'm going to pick that strike price that's at the money. I could also, you'll notice that I'm using these fib lines that are out. I'm using this as a ruler, and this is a length of 4 weeks. So I can also line up wherever I'm getting my entry, and I can go ahead, line it up with the entry here, and pick my strike price out here. So I'm going based on how long that expiration is going to last, if that makes sense. So I'm going to sell a little premium on the front side and also buy some protection on the back side. And I'll just, again, go with that same protective where that risk stop loss order is. That risk stop loss order, of course, will be moving as we ascend up that channel that Paul described, whereas my protective put that I just purchased, it'll go ahead and stay stable. What that'll create is if I go against it, and you'll notice I have some notes here, basically anytime the underlying moves against my overall trend, instead of getting out of the position, I only want to get out of the position if it's just beat my target. But if it starts to go back against me, I can take that pause in the range expansion and I can make a little bit of additional income, right? I can make some additional income by selling this front month option against the back month option. Again, creating a little bit of a reduce in the break-even price, giving me a little bit of an instant dividend, if you will. And I'll also put that protection in place. And what's nice is I'm buying that protection when we're at peace, not at war. So I'm buying it when it's at its cheapest. So not only is it going to provide me some protection, but also when we start going back up into a range expansion again, I can sell it back at a profit. And that's a little bit different. That's what we do here at Trading Trainer. We don't like to just put things on as kind of a loss center, as protection only. We like to see how we can profit from every little move. So if we reverse lower than Paul's target, that's what we're going to do. We're going to sell some front month options as premium, buffer our trade, and we're going to buy some protection, which we're going to sell right back as soon as we start moving back into the trade. What do you think of that, Paul?
Sounds very, very sensible. It's something that I used to do is for protection on those pullbacks. I mean, again, a fifth wave doesn't go straight up. It's never, the best will in the world, we'd love 10 candles, hit the fifth wave target and get out. It never goes that way. And during there, we usually get an ABC correction during that fifth wave. So a lot of the time, if on a, for me, it's contracts are different. So if he starts to come back against me, I look for an Elliott Wave, or I've got an X-Brad algo that's designed around my trader's brain, what's left of it. I'd look on a smaller time frame, like a 30 or a 60-minute time frame, and I would play short on CFDs, but leave the long on the physical stock. With CFDs, it's a highly leveraged product like options, so you can make some money real quick. And sometimes you can cover your loss. So if I've risked $10,000, if I buy it at 29.16 and it goes against me and it sells the physical stock and I lose $10,000, if it's in an ABC correction, the short on CFDs, I can make $10,000 real quick. So, you know, it's about being active, and that this strategy you just put together there with the options is about being active, and that's what we always say to traders. Don't just sit back, be active. You know, you don't just put your money, all your eggs in one basket. You've got to be active. Allow sort of money to flow through there, and that's again one of the things that we do look at is having those alternatives, because you know the best will in the world right now. I'm looking for a lot of shorts, but they're just not appearing. We're still, you know, everybody's saying, "Oh, we're overextended. Don't look, go
keeps
long."
Going up. Keeps going
you
up.
know, I have institutional. I was an institutional trader. I've got institutional grade scanning software for Elliott Waves, and I really can't find any good shorts. So
Yeah,
I've got a big long list of potential longs, and the list of shorts are very, very small. So we just got to go with the flow.
Yeah,
You know?
there's no reason, you know, a lot of that. I always say leading indicators give me the insight, but it's the lagging indicators that tell me what's really happening. So I'm not ready to go short either.
No. I am in a couple of shorts right now, but they're very weak stocks, and it took me a while to find them.
Yep.
And I always like to put testers in the water. If markets are going to change or we're going to have a correction, it's always good to put a few testers out there. Don't risk as much as you would normally do, and see if you can get in on that turn. A lot of the time you're putting testers out there and they fail, but the times they don't fail, you're there. I did try and find some shorts for today, but again, it's very difficult. So it's very, very difficult. So what I'm going to do now, shall we go on to the next stock, AJ?
Let's do it.
Okay. Let's go to the next one, MGY. Okay. I'm going to zoom out again. Okay, so with the Elliott Wave indicator suite, every stock has a certain age. This one's a lot younger.
Yep.
So where we had the start of the wave count on the previous stock, this one wouldn't count because it's too far in the future. We have to reassign that. So I'm not going to reassign it right now. I'm going to go back to the trend channel again.
Yep.
Great channel. We got 2-3 touches down the bottom here. Couple of touches at the top there, really strong there. Center line again. Look at this support and clustering here. Look at the resistance, support, resistance. They're really good. We only got one touch on the bottom. That doesn't matter. We've defined that trend. What we need to also look at now, so I left, the first one was all done. The next one, the Ema Clouds, yes, Trevor, I'll discuss how I use that in a little while. So what I want to do first is I need to look at prominent pivots, and I see a triple, quintuple top just here, which is a very strong sort of resistance zone. So what I'm going to do is I'm just going to put that down to that bottom pivot there. So we've got about 5 or 6 touches there in a zone of price. So that really is my last chance saloon for support, if you like. That's my safety net if things were to go wrong. There's no real other linear support and resistance zone, because up here we had quite a parabolic move, tipped the top of the channel, it's come back down to test here again. So don't want to overcomplicate this. No real linear support and resistance except for this. What I'm going to do now is I'm just going to adjust the Elliott Wave indicator suite here for this low. So one of the things we look for when we're isolating, we have got a big trend here. But if I've got a crossover in the oversold zone, I could in fact, and in reality as well, when we really zoom in on this, we've technically got a double bottom here at this point.
That's absolutely right.
So really, we've got a shorter term trend from this double bottom. Now, somebody says it's not exactly at the same price. Don't worry about it. A double bottom or a double top is 3%. You've got a 3% margin of error for that double top for those peaks and pivots. I can tell you now, by eye, 20 odd years experience, that's easily within 3%. That's a double bottom. So our shorter term trend not only sort of started here at this double bottom, but also at the bottom end of the channel. So that's real good start. So I'm just going to isolate there, see what that bar count is here, 952. So I'm just going to change that, 952. By the way, I'm using the trading view version of this. It is available for TOS, TradeStation and everything else. So really good. So what it's done now is automatically figured out, hey, there's some Elliott waves here. We've labeled them, the 1, the 2, the 3, the 4. Not really interested in the 1 or the 2. Remember, we're interested in that wave 4 pullback. Okay, has it met the criteria? So again, now going back to Trevor's question, the EMA clouds. So the EMA clouds are the gray is a 55 because we're on the daily time frame. Okay, they're different for day trading, intraday. For me, swing trading has made me the most money in my life. Yeah, so I use the daily and the weekly time frame because I'm British and sometimes I can be pretty lazy. So I'd like to put a stock on and leave it for a couple of months. So, you know, I don't want to be. But I mean, don't get me wrong, I do love and I love the fun of day trading futures because, boy, when it goes, it really goes. But this is my bread and butter. So the 55 EMA cloud basically is your non-linear support. And I found over the years that 55 and 89 on this daily time frame are hot snot. Okay. And I used to use these manually, but now we developed them. They're only about 49 bucks. But having these on your chart it's an absolute must for me because it's a non-linear support. So when they converge with linear support, like our wave 4 pullback zones here, we are looking pretty good for support there. One of the things I also want to discuss in this instance is the rejection of the lows here on the wave 4. That I'm just going to put the manager on there. I just want to see what the volume was. Okay, so I have another indicator that's basically it's been developed around my trade management brain, but also what I like to do is use it for identifying those pivots. So we see on this hammer or a spinning top with a bottom and all those other names you want to give it, but for me, I want to look at the behavior. It came down, it gapped down here, it came down to the lows, and buyers got really excited and bought this with high volume, not just high volume, higher than average volume. That cyan dot above says that's higher than average volume. The blue dots below are lower than average volume. Look at that wave 4 pullback, except for these two, lower than average volume. That's what we call a nice profit taking process, where we're just getting people skimming off the top. So we're getting institutional traders taking 10% off, taking profit 10% off. So there's no real drive to go down. They're just, you know, we're getting towards the end of the quarter. We need to buy the wife a new car or something like that. They're just getting their profits booked in so they can get their quarterly bonus. But they don't want to take their whole position off this because they still see it's in a strong bullish move. So we've pulled back on lower than average volume. But for me, this wave 4 dipped into the amber zone. We're in the 55 and it rejected those lows on higher than average volume. That is a really fantastic sign for that pivot. So I'm just going to take that off. I want to clean the chart up a bit. We look at the stochastic, false breakout dots at the top there. It took a while coming down, but it's crossed in the oversold zone. So we're good on the stochastic. The Elliott Wave oscillator between 90 and 140. This wave 4 has behaved very, very well. Entry though, let's have a look at this regression trend channel. We're going to put that on there. We're going to click on the wave 3 pivot, click on the wave 4 pivot. 84%. Okay, it's not my 90. So I'm not going to be overly aggressive with this entry. Okay, when you're trading, whether it's options, stocks, CFDs, crypto, you've got to have the discipline. If my rule is 90% on a Pearson's R, if it's below at 84.5% this one, I'm not going to go aggressive out of this trend channel. Okay, I need to stick to my rules. I'm going to go and I'm going to go in above my 6-4 moving average high, which is my conservative entry. So now we can see today we've had a bit of a down day. I mean, to be honest, it was a weird day because the actual PMI figures were lower than expected. We had an initial bounce on the indexes with that data. Then all of a sudden we dropped, and now it's bouncing again. So we're having one of those really weird sort of volatile days from data. So what we've got to consider now is we look left. Do we see any major sort of shoulders that we want to get above? We've got a bit of one here. It looks like, you know, we go a few days, we pull back, we go a few days, we pull back, we go a few days, we pull back. So that's how this bullish trend works. We've got no real sort of major shoulder we want to get over. On the wave 4, was there an attempt to move up with volume and it failed? We already looked at that, but I confirm it. So these up days here were lower than average volume. So there's no real sort of, you know, this one rejected the lows, but it's a grey candle, which means it's lower volume than that previous candle, which was green. So that's accumulation. So that started, there was more buyers. Here it was, you know, it was about the same buyers and sellers. And we had lower than average volume. So we can't really look at the behavior of the wave 4 to help us with our entry. So really, we've got to think, and you know, just to make it in layman's terms, I'm going to put some lines on the chart here, horizontal, vertical line even. That's tomorrow's bar position. We're closed Thursday, are we not?
Correct.
For Thanksgiving.
Correct.
Friday's bar position. Okay. So let's be honest, we ain't going to get along today. Okay. The volume's going to be low tomorrow. Okay. And let's face it, half those institutional traders won't come back on Friday because they've gone to the Hamptons. Yeah. So this, you know, for me, I finished today is my last day trading this week. I'm out of here. So what I'm going to look for is Friday's bar position. I want to be above the 6-4 moving average high. So just in case, I want to put my order at that sort of price there. And I don't want to use that. I want to use a trend line. It's easier. Okay, so I'm going to be around about, let's make it easy, 2033. Okay. So again, tomorrow, if it does get in at 28, I won't put this order on until Friday. Yeah. But this is my criteria, my start line, purely because our stop is quite low on this pivot. So we got to put, to work out our risk to reward, our stop down here. I just want to make sure that we are low is 1846 and we're in 1843. That's good. Risk to reward's pretty tight here, pretty tight. We'll try it. We'll look at it. Okay, we're good. You said 2033. Let's just adjust that here. Go up, down, all around. So my minimum requirement for any swing trade is 1 to 1.6. Okay, I love fibs, and I've always had that minimum risk to reward as 1 to 1.6, which actually takes us to the top end of the channel and to the top end of that automated 5th wave target zone. So we've talked through the trend behavior, the wave 4 pullback behavior. There's an 80% probability it's going to go and hit that 5th wave target because we've found that great support and that rejection in the amber zone, and also that nonlinear Ema cloud. Everything else, stochastic, oscillator, is fantastic. We got a sensible entry, put the order on Friday, 2033. If it doesn't take it in Friday, leave it on Monday, Tuesday. That's a sensible entry for me. Okay, over to you, AJ.
Tell me, Paul, where do you think that's going? How high?
Uh,
What would you be happy with?
I'd be happy with a 2350.
Got it. So
I'm
let's take a
sorry, it's
look.
not a whole number.
No, that's okay. Let's take a look at the options, because that's what we do here, right? Now, the options here are a little bit on the more sparse side, right? We don't have all the different exchanges picking up the options here. So we don't have leaps. We don't have our selection's limited, but it's not impossible. Now, again, for the replacement, I just want to get a very good leveraged option. So while Paul's buying the stock, he said he's going to, basically put a risk somewhere around $16, a risk stop, and he's looking to get in at $20.33. When he gets in on his stock, I'm going to look at these June 17th, 2022 options, and I'm interested in the 1750. The reason why I'm interested in the 1750 is I don't have something at $16. I want to be around that area where we think risk. I want to stay in the money before I wind up popping myself out of the trade with a conditional stop loss order.
That price is below the 89 Ema Cloud as well, AJ. So that works out very well.
That works out very well. So I'm going to be thinking about this 1750 now. Coming on back, looking to the future, I've got that position. I call that my back month option. It's also my initial purchase option. I'm going to be watching, and I think I'm going to be following along with the channel that Paul drew. But I'm also looking at that 2350. Now, if I start to peter out above 2350, I'm okay selling that position and taking my profit and moving on to the next piece. However, if I start to peter out lower, whether it be 2350 or I'm just following that level of ascending resistance, where if I start to peter out lower, again, I'm going to use the same strategy I used on IGT. I'm going to ride that pullback, that range contraction by doing two things. Number one, I'm going to sell a front month option. It's only going to last about 3 to 5 weeks. So I'm going to sell a front month option at whatever top that I find. That's going to create a instant dividend. In other words, it's going to give me some money to apply to my break-even price, pull my break-even price down, but it'll also give me kind of a collar top until it expires 3 to 5 weeks later. As the underlying symbol is pulling against me, I'm okay with that, right? I'm also going to give myself a bottom level by buying a protective put. So just in case, it decides, as Paul was mentioning, he's always testing some short positions. I've actually got a short position, but I bought it at bargain basement prices because I bought it when I'm up here at this top. I call that buying at times of peace. And so I'm buying it at bargain basement prices. And now what am I waiting for? I'm waiting for when I get back into some range expansion, going with this medium to long duration trend again. As soon as I find that bottom, I'm going to go ahead and liquidate both of those positions, the front month option, and I'm going to liquidate the protection option. I don't need it anymore. Once I resume, I can roll it out the next time it goes against me. Now, the scoop is I'm going to be able to make profit on both. The other scoop is by the time it does that, this one, the shorted option, may have already expired. It only lasts for 3 to 5 weeks. And like I agree with Paul, I'm in it for the long term. In fact, I don't really like to sit in front of the computer doing my trading on a daily basis. I'm not British, but I'm just as lazy as Paul is. They often call me the most disciplined option trader, but I think behind my back they call me the laziest option trader, and that's because I like to be as efficient as possible. So when that reversal happens back and I keep going into my range expansion again, I'll go ahead, if I still have a shorted position, if it hasn't expired worthless already, I'll go ahead and close that position down and I'll sell the protective put back. However, if the underlying drops down, the back month option will get stopped out. And guess what? I'm left with that protective option appreciating already in place. And so I'm protected on both sides. I've basically collared my position. Whenever I am in a range contraction phase, I'm going to collar myself in both directions, allow it to contract, collect the incomes, and then when it's expanding, I'll just let it rise unfettered. So that's kind of my strategy with MGY, very similar to the strategy on IGT. Just want to protect myself every time I have the pullback and then let it rise when it's going for me.
Cool. That's a lot of crayon on that chart.
Yeah. Our technical guy set me up, Paul. Our technical guy set me up with this screen marker, and I maybe use it a little bit too much. Anyway, we'll move on.
So what we're going to do now is I'm going to look at probably, where are we? One more. So we're going to look at VET. Now, sometimes options aren't fantastic on these, and sometimes you have to walk away. So, you know, I can find stocks to trade pretty much every week. And, you know, you guys that sit in front of the computer, you probably do the same sort of thing. But there's not always options here. So now we're going to throw a couple of curveballs at AJ to say, right, I think this is a great stock, but is there an options trade there? So again, using the same analogy, I have got VET, an energy company. It's a cheap stock. Sometimes cheap stocks, especially energy stocks, aren't great on options. But for me, this has had a real good run. After the pandemic pullback, which we see here, which was parabolic, we came down to form a double bottom, and then since then we've been a really good. It's not a Visa-esque type trend channel, but it's, you know, it's moving in the right direction. We've got some great tests on the center line here, both from above and below. And what I'm really interested in at the moment is this short-term bullish run from the bottom of the channel. It crossed over in the oversold zone on the stochastic. So we came up and then we just so many times to push through that resistance there. And then it's pulled back on a wave 4. What really interests me here is that I've got support. This is a big linear support and resistance zone. So we've got this big crown here where we attempted to push through and it failed. The bottom end of that support zone is where we tested that upper bound of the channel. And just coincidentally, this is where we have found linear support as well. And it's a great example here to show you that sometimes that 89. So what we have now is we've got the amber zone on the wave 4 pullback, 80% probability it's going to go in at a fifth wave high. The non-linear support on the 89-day Ema cloud, non-linear support on the center line of the channel as well, literally to the cent. So we've got an 80% probability it's going to go on that fifth wave target, but the support it's found is phenomenal. All the stars are aligned here. False breakouts on the stochastic. We've crossed over in the oversold zone. The Elliott Wave oscillator between 90 and 140, and we've had a gap up today. Okay, which is really, really good. Now, let's just put the regression trend channel on there to see if it meets the rules for an aggressive entry. 90.2%. There we go. We're already out of that regression trend channel. So this has broke out of that profit-taking channel now. So this is a good-looking trade. So options are not actually the options trading. My options here would be to either get in at market, okay, or the sensible British person in me wants to make sure we beat today's high. So it doesn't. So just because we've broken out of that channel at the moment for the day, we've had a 50% retracement. Okay, so at some stage when we got to those highs, some institutional traders said, you know, I'm going to take a bit of profit here. Okay, they didn't continue buying. So there was a bit of behavior in there that said, actually, I want to take some profit here. Now, it could be that we're leading into this holiday weekend and, you know, Black Friday, and they want to buy the wife a new TV, 86-inch TV, all that sort of stuff. So there's a lot of factors in there and behavior that we can't understand. All we can see so far is we're in the session, we've retraced about 50%. So I wouldn't buy it at market. I'd probably buy it above the 55 EMA cloud and above today's high. That would be my aggressive entry there, around about 1010. 1010, I like 1010. We've got a stop at 909. Let's stick with the theme of those figures. Risk reward is phenomenal here. Absolutely phenomenal. We're almost 1 to 3. Target $13. Unlucky for some. So we got an entry at 10:09. So it's got to breach today's high tomorrow or Friday. We're above the 55 EMA cloud. Everything else is pretty much spot on. We do know we're going to get some resistance at this upper bound of this channel, but the risk to reward to there is above my minimum 1 to 1.6. This is hot snot. For me, it's a cheap stock. You know, you bung a couple of grand in there, and that could turn into $6 or whatever as we move up. So this is a good looking stock. But over to you, AJ. Are there any options on this one?
Well, here's the scoop. I think I would do the stock as well.
Yeah.
I do see some options. I see, again, I would want to go at least 6 months out, if not farther. And there is actually some liquidity. I'd want to go down to maybe the $5 strike price, maybe the $7.50 strike price. But I want to go deeper in the money. But I could also see, because it is a cheap stock, buying the stock. But here's the key. The key is as an option trader, as it goes up towards that $13, if it goes above that $13 target, great. I'll take my profits off the table. I'll move on. But if it pulls back earlier, that's what I'm going to slap on. And there's plenty of option selections here. If I take a look at the near-term options, there's so many option selections that I could actually sell. And remember, when you're selling an option, you are making sure you are taking on an obligation, right? You're getting involved in a commitment. And the reason we like to sell the near-term options is because of something called theta decay. It's built on the whole human psyche that we like to procrastinate, right? I know that because I've got a teenager working on a science project, and what are they going to do even though they have 3 months to work on it? It's that last 3 or 4 days before it's due that they're going to be pulling all-nighters. Well, the same thing happens with the option price. So that's why we use these near-term options, because not only can we sell them and make a little bit of money, but they expire very quickly and they expire exponentially. They lose the value. So we sell at a high. It's very much like shorting. We sell at a high and then it expires worthless, or we can buy to close it at a much cheaper price. And the scoop is that we can take advantage of those temporary pullbacks. If the trend doesn't make it up to 13 on the first attempt, fine. We'll sell a little bit of premium and make a little bit of money back and allow that thing to expire worthless based on the theta decay. And so that's what we want to take advantage of. And that's what I'm always thinking about, is how can I use my option strategy? Now, to get into that commitment, that obligation, I need to promise, if I'm using call options, I need to promise to have some underlying symbol available, because if somebody ever wanted to exercise me, that's what the contract is. It's an obligation. I have an obligation to deliver to you stock at that strike price. You pay me that strike price, and in return, you get the right to exercise me. Now, nobody's going to exercise me. You know, who would pay if I decide to sell the $12.50 option and the underlying stock is trading at $11? Who would pay me $12.50 to buy my stock when they can go out at retail and buy it for $11? But should the underlying symbol then start to shoot higher, like say $13, $14, I need to be ready. That's the whole agreement. I need to be ready. So I either need to own the stock, and that's why I have that either initial purchase of stock or a back month option, or I need to have an option that I can then go and exercise it, do kind of a dual close. So if somebody's exercising me, I can go exercise them and I can keep the spread in the middle, the difference between the two prices. So in this case, I like the idea of just buying the stock. I mean, I can see a little bit of discount about trying to buy the options, but if I try to go into that, remember, options markets are not like stock markets. There's a lot less buyers and sellers. So if I go in there and I want to hit that target price and nobody's willing to sell to me at that price, then I'll just go buy the stock, right? There's not that much benefit to getting the leverage out of it. However, if I hit that pullback early, there's a temporary pullback in the trend. There is plenty of opportunity in this symbol to go ahead and sell some near-term at-the-money options, make a little bit of money, let that theta decay, that procrastination kick in, and then go forward when the range kicks back into play. So I'm ready on all accounts. That's what options allow you to do. Options allow you to hedge every time the range expansion starts to come back to a range contraction.
Excellent. Okay. So I'm going to throw one more fastball at AJ, but this time we're going to look at a weekly chart. So this is a longer term swing. And I've noticed this year, although we it's almost like scraping ourselves up a volcano, this trend this year, it's been slow. So when you put a swing trade on a weekly time frame, you've got to be prepared to hold that for 6 or 12 months. And it's almost turning into an investment because you're long holding that long.
Nothing wrong with that.
Ago, a swing trade on a weekly, you'd be done in 10 weeks and finished and made the money. But the market behavior right now is to the point where we've got to be looking to hold longer. So I'm going to look at Charter Communications, CHTR, on the weekly. Again, I'm going to follow the same rules because I do the same thing every time. As a trader, imagine yourself as a sprinter. How many times do you practice that start as a sprinter? You go through the same things every time. And as a soldier stripping a weapon, you do the same things in the same order every single time. And as a trader, guess what? Do the same things in the same order every time. And if it doesn't fit your criteria, don't trade it. There's 8,000 other stocks out there. There's plenty to grab hold onto. But what caught my eye on Charter, yes, it's an expensive stock, but it may be good on options. But for me, the trend channel is phenomenal. I've had some what we call harmonic patterns down here. I'm not going to really discuss about them today. But I've got the center point of a harmonic pattern and the end point, a D pivot, on that upper bound of this channel on the weekly. And then it's tested here, here, here. On the bottom, we've had one big test. The center line, we got the C pivot of a harmonic pattern as well. And we've got support here for weeks, nearly 8 weeks here. So this is a really good, strong trend channel for Charter. Really strong stock. I actually physically hold this right now, but what I want to talk about is this wave 4. So again, same rules apply. Look at this zone that I've put in, linear support and resistance zone, where we're touching the top of that channel. I put the zone in the bottom of this pivot, the top of the zone at the top of that pivot, and look where it came down to test here for support as well. Look where it is right now for support. Real good linear support and resistance. Now we zoom in. The 55 EMA cloud is holding as non-linear support. We're in the green zone. 85% probability it's going to hit the 5th wave target zone. We've got the false breakout stochastic dots on the stochastic. It's crossed over into the oversold zone. Critical time right now. It needs to start to move away this week or next. Otherwise, we'll get the false breakout dots on the bottom, which means now we're probably going to go down. For me, I would probably look to break the wave 4 and go short and look on a smaller time frame. This is one of the ones I'm keeping an eye on, if and or logic circuit. So if we get above this price here at $720, above this pivot point, above the center line of the channel, because I've got regression trend channel at 92.3%, so really good wave 4, but it's got to move up above here in the next 2 weeks. If it does not, and on the weekly I get these false breakout dots form on the bottom, I'm going to turn to my expert algo and I'm going to look on the daily, the 4-hourly time frame, and I'm going to look for one of those testers of the of a short. So this is an and or scenario. So what we'd look for right now is the long above 720, AJ. Stop for me, which might help your strike price, is around 658-ish. So over to you, and let's see what there is.
Well, and it's funny you should say that. I just want to focus really for a second. What is it with folks where they get so emotionally connected with a particular symbol that they must trade it and they can't move on? It's some sort of mental commitment or issue like that, because I don't know what that is, but if it's not working for you, move on, right? So taking a look at Charter, I really like Charter a lot, and I like the slower investment. So we're going to go, we want to create a little bit of a discount for ourselves. I want to go farther out in time. I'm thinking the leap. This is the January 20th, 2023 leap. That's over a year away in expiration. And I'm going to go deeper in the money. And I'm looking over here in the open interest. I'm looking at the bid-ask spread, and I almost think that I'm interested in this 650 strike price. So I'm deep enough in the money. You can see over here it's going for about $91.95 per option share. And this is over, it looks like it's just about over 65% intrinsic value. So it's pretty much going to be moving dollar for dollar with the underlying symbol, right? Because the extrinsic value will move a little bit as well. Something like that. So I like that particular option as a substitute for the stock. And I'm going to hold it for the long term. That's why I'm purchasing it that far out. And again, the beautiful part about having that back month option is as I'm riding the move back up, and I'm going to grab my marker again here, as I'm riding this move back up, again, if I go high, I'm just going to go ahead and exit the position and take my money off the table. It's done its job. However, if it falters, as these things tend to do, every time it falters on its path up, I'm going to turn that into a profiting situation. I'm going to be able to, because I have that back month option in place. In other words, I'm covered. I'm going to go ahead and sell a near term at the money option, only worth 3 to 5 weeks. And that's going to allow me to go ahead and profit. Now, every time I get in that obligation, I get in that commitment, I need to have a prenup, right? I need to have something that's going to cover my butt while I'm in that commitment, because as long as I'm in that commitment with that underlying symbol, in other words, I have the obligation to deliver on the contract that I just sold, I'm going to put some protective options in place. And these protective options protect that trade, but it also gives me a little bit of a profit center, because when I roll that option out, I'm going to make a little bit of extra profit. I call it the frosting on the cake. So I'm always thinking about not just catching the swing with a leveraged position, but also on my travels up, every time I take a little bit of a break, how can I add a little bit of profit or economics to my trade? So I think that this symbol, and I think that I can do really well by reducing my, how much money I have to invest on this by using a leveraged option. But I'm always prepared for selling premium and protecting that premium, collaring the trade whenever the trend goes against me temporarily.
Perfect. So we had a target of 880, but again, we won't be interested in actually putting that order on until we get above 720.
Yep.
I think that's sensible here. It needs to do some work. It needs to earn a bit of, some confidence.
I
So
agree.
getting above 720 would really do it for me. So but again, longer term, this is really good. I mean, it's like Visa. I've had Visa for a long time. So,
Yeah.
I
When
had
I'm
a
when I'm thinking about trading these, Pauls, I'm not thinking about, I'm thinking about doing maybe 2 or less transactions per month. And that's
yeah,
only if the symbol is telling me to. Otherwise,
yeah,
I'm not going to be hovering over this thing. I agree with you. This is more like a portfolio manager putting in a long-term investment.
yeah, yeah. And the good thing is, with the options plays you've discussed, you can actually hold them for a longer time and have those defense mechanisms in there as well to continue to make that money. So
Absolutely.
you can still got to be reasonably active, but you don't need to be staring at the screen every day. Wait for the market to close each. For me, I live in Europe, so the market closes at 10 p.m. I've had a couple of whiskeys by then, so I get up the next morning. The
That's
markets have
good.
closed. I make my decisions.
That's right.
I don't. What does it do? What does it do?
No.
For me, candles got to close not only for 1 day, for 2 days. So I'm just gonna. If I just show you something right now, that I'm in, and sometimes this is why these take a long time. So I'm just going to go to NVEE. So this is on the weekly time frame here. Same setup. I got in at 93.82. It's just going into that fifth wave target zone now, but this has been on since August. This was a summer trade. So again, look what it did when it hit that pivot. It pulled down. That was the time to get
Mhm.
that defense mechanism on and make some money shorter term with a 1, 2, 3,
Absolutely.
4, 5 weeks there. That's when you make that money on those options that we talked about. It found
Absolutely.
higher support and it went again, pushed through there. We got the earnings reaction we needed, and then now it's going to the moon.
Yep.
So again, this is a prime example of being active, but again, each candle's a week, guys.
Right.
You could do this in a tiki bar in bloody the Caribbean. It's not. You don't need to be there all the time.
Yeah, there's no reason, to create a job out of this. This is where you just let your money work for you and you just be very strategic.
Absolutely. Okay. So we've had a great hour. It's gone so fast. I can't believe it. So hopefully this format has worked. Obviously, we're going to promote the video now to watch back on through our lists, and we would help ask people to comment in the YouTube or the Facebook or wherever. Do we need to do something different? The layout, what do we want to do? Because AJ and I want to keep working together. We want to do a few of these
Yep.
sort of testers to see if we get the format right. Is it helpful? Will you tell your friends? Is it, subscribe to our YouTube channel so you get notified of the next one? Put those comments in there. Is there something you didn't understand? Do we need to make something clearer?
Yep.
Because I think this has got some real good traction here in that I can
Potential.
find stocks and then AJ can find the options plays. And,
Yep.
eventually, if we turned this into some sort of membership and we're actually not just doing 2 or 3 live, and we do a live session probably once a month, but once a week we're feeding in these ideas from me technically finding those great looking stocks and AJ putting those options plays together on a spreadsheet. There's some traction here because there's some fantastic opportunities, and for me, AJ, I've enjoyed this. Hopefully we'll do it again. It's going to be tough to do it before Christmas because I live in the south of Spain. My family are in the UK, and I've got a lot of kids and grandchildren, so I've got to do the whole traveling thing. But hopefully, if we can't get it in before Christmas, we'll definitely do one at the beginning of January, I think. What are your
Yep.
thoughts?
I agree. We'll try to get it in if we can, folks, but I'm just as busy. So, many of you know that I've got a newborn here with us. So we've got our hands full. So we'll try to do this in December, but I'm with Paul. Send us feedback. Where do you want to see this go? Do you want to see us give more of a kind of a lesson? Do you want to see more real-time stuff? Give us all the feedback we can, because you're involved right now in kind of the melding process. We'd like to go forward with this.
Excellent. Well, that's it for me. We're 6 p.m. My dinner will be waiting, or in the dog, one of the two.
That's right.
So I've enjoyed it, AJ. Thank you very much.
I gotta say, Paul, you have a lot of the same trading philosophies that I do, and it's just a pleasure to work with you.
Fantastic. It's been great. I enjoyed it. I love this. I can't swear, but I love this stuff.
All right. Have a good rest of your day.
Thank you. You too. Bye-bye.
And thanks everybody else. Bye.
Thank you.